Born from a single humiliating loss, built on math no one else understood, and now quietly sitting behind the biggest decisions on the planet. It owns a piece of Apple, a piece of Microsoft, a piece of ExxonMobil, a piece of your pension, and most people have never heard its name. This is BlackRock, the most powerful company in the world that owns almost everything. 1986, Wall Street. A 33-year-old hotshot named Larry Fink is riding high at First Boston, one of the most prestigious investment banks in America. He's the mortgage-backed securities guy, the wunderkind, the one they all point to and say, that's the future of this business. Then, in a single quarter, his team loses $100 million, not because of bad luck, because of a miscalculation, a wrong bet on interest rates. One number, one decimal point in the wrong direction. He was humiliated, professionally, publicly, the kind of loss that ends careers. And for Fink, it did something worse. It lit a fire. If I had better risk management tools, that never happens. So he built them. 1988. 8 people, 1 office, 1 obsession. Don't lose money. Fink and 7 partners, Robert Capito, Susan Wagner, Barbara Novick, and 4 others, started what they called Blackstone Financial Management, a small division inside the Blackstone Group. No consumer product, no retail storefront, no flashy branding, just risk. Pure, obsessive, algorithmic risk management. Their pitch was simple. We understand bonds. We understand danger. We will not blow up your money. And the institutions with the most money to protect, pension funds, insurance companies, sovereign wealth funds, said yes. Within 6 years, they were managing $53 billion. They had also changed the name, split from Blackstone entirely, and rebranded as something that felt permanent, heavy, immovable, BlackRock. But here's the part most people miss. BlackRock didn't just build a fund, they built a machine. They called it Aladdin. Not cute, very intentional. The all-seeing lamp. The genie that grants the wish of whoever holds it. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. It runs on 6,000 computers in a data center in Wenatchee, Washington. It analyzes stock markets, weather patterns, geopolitical shifts, government elections, interest rate movements, anything that could shake a portfolio, and spits out probabilities. It doesn't just track your money, it tries to see the future of your money. And here's where it gets genuinely strange. BlackRock didn't keep Aladdin to themselves. They licensed it. Banks use it. Pension funds use it. Insurance companies use it. Governments use it. As of the last public count, Aladdin manages over $21 trillion in assets. Not BlackRock's assets. Other people's assets. Aladdin is the operating system that much of global finance runs on. And BlackRock owns the operating system. Think about that. The company doesn't just manage money. It manages the software that tells the rest of the world how to manage money. 2008. The financial system is on fire. Lehman Brothers is gone. Bear Stearns is gone. AIG is technically gone. Fannie Mae and Freddie Mac, the institutions backing half of America's mortgages, are being absorbed by the government in a state of controlled panic. Washington picks up the phone and calls BlackRock. Not the Fed, not Goldman, not JP Morgan, BlackRock. They were handed $130 billion in toxic assets from the Bear Stearns collapse. They were asked to value and manage the mortgage portfolios of Fannie Mae and Freddie Mac. They helped the Federal Reserve unwind $1.25 trillion in mortgage-backed securities. This wasn't a bailout. This was an appointment. The United States government looked at the rubble of the financial system and said, "You're the most trusted name in risk. We need you." And suddenly, Aladdin had access to something priceless. Not just data, government data. The kind that flowed from crisis management contracts with the US, the UK, Greece, and beyond. Every emergency, every toxic portfolio, every stress test, all of it fed back into the machine. After 2008, BlackRock didn't just survive, it absorbed. In 2009, they acquired Barclays Global Investors for $13.5 billion, and with it, the iShares ETF business. Overnight, BlackRock became the largest money manager on Earth, from $314 billion to $3.3 trillion in one deal. And here is where the story stops being about finance and starts being about something harder to name. Because of how index funds and ETFs work, BlackRock doesn't just invest in companies. It invests in all companies, simultaneously, all the time. Apple, Microsoft, Amazon, Nvidia, ExxonMobil, Johnson & Johnson, Disney, Netflix, Bank of America, Tesla. BlackRock owns meaningful stakes in all of them. Not because it picked winners, because it bought the whole board. When you invest in an index fund, you're buying a tiny slice of everything. BlackRock pools trillions of those tiny slices, which means BlackRock shows up at shareholder meetings as one of the largest, sometimes the largest, voting shareholders in the room. They own 5.6% of Apple, 5.7% of Microsoft, 7.3% of Nvidia. They don't run those companies, but they vote. And when you're the largest single shareholder in the room, your vote is more than a vote. It's a signal. It shapes policy. It shapes CEO behavior. It shapes which direction the entire company points. Multiply that by thousands of companies across every sector on every continent, and you start to understand what people mean when they say BlackRock owns the world. They're not being hyperbolic. They're being descriptive. The company that started with 8 people and 1 obsession now sits at the center of the global financial system. By 2020, BlackRock had crossed $7 trillion in assets under management, then $10 trillion, then $12 trillion. As of early 2025, they manage more than $13.5 trillion. That is more than the GDP of every country on Earth except the United States and China. More than Japan. More than Germany, more than the entire European Union. One company, one set of quarterly filings, one building in Midtown Manhattan where Larry Fink writes his annual letter to CEOs, a letter that, by now, moves markets, shapes boardrooms, sets the tone for what corporate America is expected to care about. When Fink said ESG, environmental, social, and governance, mattered, trillion-dollar institutions listened. When he later backed away from the term, they listened to that too. Because when the man who manages $13 trillion changes his mind, it's not an opinion. It's a weather event. But of course, not everyone is a fan. From the left, climate activists called BlackRock the world's largest financier of deforestation and fossil fuels. Protesters showed up at shareholder meetings waving signs about Amazon rainforests and coal investments. From the right, Republican governors called it woke. States like Florida, West Virginia, and Louisiana divested from BlackRock over its ESG positions, arguing that a private company had no business using its financial leverage to push a political agenda. BlackRock somehow managed to be the villain to both sides simultaneously, and Fink's response? Somewhere between defiant and exhausted. He stopped using the word ESG entirely. It's been weaponized, he said, which is a remarkable thing for the man who made it a global business standard to admit. And then there's the deeper question, the one that doesn't fit cleanly into a political argument. When Aladdin is managing $21 trillion, not BlackRock's money, just managing the analysis for other institutions, and all of those institutions are running the same models, the same stress tests, the same algorithmic outputs, what happens when the algorithm is wrong? What happens when Aladdin sneezes? Because if every major pension fund, every sovereign wealth fund, every insurance giant is reading from the same playbook, they don't just react to a market crisis, they react to it the same way, at the same time. A flash of synchronized panic, trillions moving in the same direction simultaneously. And at the center of that system is a company with offices in 30 countries, clients in 100 countries, and a software platform that quite literally has no peer. Critics have called it a systemic risk, a financial monoculture, an oligopoly on fear itself. But BlackRock calls it risk management, and the most uncomfortable truth? They're both right. Aladdin was built to prevent chaos, and in many ways, it has. But the very thing that makes it powerful is what makes it dangerous. When everyone trusts the same model, everyone shares the same blind spots. In 1986, one wrong bet cost one team $100 million. Now imagine one wrong model, trusted by half the financial system on Earth. What will happen? There's no historical precedent for that, because there's never been an Aladdin before. So it all started with one man's need to never be caught off guard again. A $100 million loss. a bruised ego, and an idea that if you could just see everything, every variable, every connection, every ripple before it became a wave, you could stay ahead of the world instead of chasing it. The company that started as 8 people in one room now sits quietly behind more wealth than most nations will ever produce. It doesn't make a product you can hold. It doesn't run a government. It doesn't command armies. But it votes in your company's boardroom. It manages your pension. It runs the software your bank uses to decide if it's scared. BlackRock doesn't own the world the way empires did. No borders, no flags, no wars. Just a number. $13.5 trillion. And a quiet understanding that when BlackRock moves, everything else moves with it.